Next to me is Satyan Gajwani, Vice Chairman of Times Internet. Sachin Bansal, who needs no introduction. We hear a lot about big billion sale now. I'm sure there is another $1 billion sale that Sachin may want to talk about. The Executive Chairman of Flipkart, Chanda, Kochhar, MD and CEO of ICICI Bank, one of India's best banks. Mr. Kumar Mangalam Birla, Chairman of the Aditya Birla Group. Mr. Uday Kotak, Executive Vice Chairman and MD of Kotak Mahindra Bank. I'll just make one small point out here. We have talked a lot about entrepreneurs here. Many years ago, 30 years ago to be precise, or probably a little more, Mr. Kotak chucked a job in one of India's best multinational, one of the biggest multinationals, and borrowed money to start a company which has now become history. So the entrepreneurial spirit. Zarin Daruwala, MD and CEO of Standard Chartered Bank. Mr. Dilip Shangvi, MD and CEO of Sun Pharmaceuticals. And Vijay Shekar Sharma, founder and CEO of Paytm. Give them a big hand, please. So, gentlemen and ladies, if I could start the discussion. Next week, the RBI Monetary Policy Group is meeting. They will probably have some good news. They may not have some good news also. But last month, they definitely did have some bad news in the form of the RBI annual report, which painted a very bleak, very somber picture of India Inc.'s manufacturing growth, of fixed capital investment, of investment going in fixed assets. The government has been talking about easing the rules for doing business, making it easier for businessmen to do, set up projects in India, get approvals, and do everything that they want to do. What I would like to ask this panel is, starting with each one of them, about how easy has it become to do business in India in the last 2 years, and have the government's initiatives actually had an impact? Or have there been substantive change, or is it just cosmetic and still talk? Can I just start with Mr. Kumar Mangalam Birla, who has a very big manufacturing business? Mr. Birla, sir, what, according to you, has been the impact of the government's changes?
So, I think, Sriram, on the manufacturing front, I can say with confidence that things are looking much better. Several initiatives that this government has taken, for example, environment clearances are happening much faster. So I believe, I read in your paper that projects worth 600,000 crores have now been cleared from an environment perspective. I don't know if that number is correct, but you do have environment clearances at the center that are happening much faster. In terms of coal, for example, which was a huge pain point with the previous government, and because of which several companies piled up debt on their balance sheets, you have a much more transparent bidding process. Even the linkage for coal is now something that you can bid for. So you're that much more in control of your destiny. If you look at power being another huge area that created a problem in the previous government, you have a new scheme called the Uday scheme, which basically increases the financial strength of the discoms, which is the weakest link in the power sector. So lots of things that the government is doing on the manufacturing front. I do believe that the reason why investments on the ground are not happening is because most companies have huge debt on their balance sheets. And that really is a result of so many factors over the last 5, 6, 7 years related to delays, essentially environment, coal, and many other such things. So I really think that the government is doing the right things, but it will take maybe a couple of years for actual investment in manufacturing to start happening on the ground.
Debt on the balance sheet is an important point, and we all know about the debt on India Inc.'s books. What about demand on the ground, sir? What kind of demand are you seeing, especially from some of your businesses like, say, cement?
So I think it's a bit of a virtuous or a vicious cycle. I think once investments start to happen, you will have a demand cycle that will be much stronger than what we are seeing today. So cement demand is a bit checkered, muted in some places, muted in most places as of now. But once you have the government spend on the ground on infra starting to take up, I guess that should look up to.
Government spend.
So I think it's happening with a bit of a lag from the time that the government is placing orders to the time that you're actually seeing spending on the ground. That lag is perhaps more than what we would have hoped for.
Right, infra growth and infra spend and the actual orders coming through, and that's something that we've been talking about and waiting for a long time. But let me just ask another businessman out here, Mr. Dilip Shangvi, who also is in a regulated business, so to say, and whose company has also had dealings with the government. So in your view, and whatever you have seen of the government in the last 2 years, how easy has it become for a pharmaceutical company to get approvals, to make investments, and get clearances for whatever they're doing?
Look, clearly I think there is a, what you call, focus on ensuring that the projects that we are trying to set up in different locations get clearances rapidly. And unlike the other sectors, if I see in pharma sector, then most of the companies, including Sun Pharma, we are adding significant new capacities, either enhancing capacity in existing facilities or setting up new facilities. And this is because we are not only growing in India at double digits, but I see a possibility for India to become a global pharmacy and becoming increasingly important source of pharmaceutical products globally. So I think I see all the appropriate infrastructure for pharma companies to continue to grow in future.
Is it easier now for you to get drug approvals than it was in the past?
I think pharmaceutical companies in India have a what you call multi-levels of drug approval process.
Right.
We've older products that we get drug approval from local or state FDA, and new products that we get approval from center. And I think there is a focus on at the request of industry to migrate towards global practices. So that is what you call will lead to ultimately product quality in India meeting global standards, and for a short period of time till we make up for the difference that new regulations apply. But I see facilitations like things that we require to move our product development, approvals are happening rapidly.
Approvals are happening quite rapidly. Mr. Kotak, if I could ask you to comment upon India Inc.'s growth ambitions and what they are doing on the ground. You once said in an interview to us that the Indian entrepreneur, Indian businessman's investment model is broken. Now, if it's broken, how can it be set right?
No, I think it really goes back to what Kumar said, that a lot of Indian businesses today continue to be excessively leveraged.
Right.
Therefore, there are very few businesses who have made sure that they don't have excessive leverage on their balance sheets, and therefore businesses sitting on that excessive leverage are burdened by that. So ability to make new private investment in the short run gets limited. And I genuinely believe that a significant move will happen other than a few businessmen, whereby you will see a much more institutional backed funded model with professional entrepreneurs with relatively smaller skin in the game. The traditional model where promoters normally had 50, 60, 70% ownership in companies. So you're seeing a fundamental structural shift in the Indian business model, where you will have a few promoters continuing the way they are and a whole host of businesses starting. And you can see that right across on this panel, where a number of new businesses have relatively smaller skin in the game, but a lot of institutional money backing it. It may be tech, it may be finance, but you're going to see that move across different sectors. And therefore, my sense is, if you look at even an area like infrastructure, where you saw a gold rush between 2004 and 2010, with very little equity in promoters' pockets, but disproportionately large leverage bets, I think that's a thing of the past. You will need a model with significant equity funding and different kind of way of doing business in India. And I think we are in for a structural change.
We are in for a structural change. And if it's not infrastructure, if it's not steel, if it's not refineries, we're going to see more investment happening in e-commerce perhaps, more investment happening in digital maybe, and payment banks expanding and e-commerce companies expanding. Sachin, if I could ask you to comment on that.
Yeah, I think we will see definitely digitization of the economy is happening at a very fast rate, especially with the new government coming in. They have accelerated the pace at which internet growth was happening. And internet is also changing. It's becoming wireless instead of the traditional thought of the traditional internet of broadband.
Right.
It's also becoming something different. So I think, and smartphone today, combined with the fact that ability to crunch data at a very large scale and store data in a very cheap manner is actually creating a new paradigm which was never thought of before, and India is tapping into that new paradigm straight away rather than getting into something old and then shifting step by step. We are skipping a lot of stuff. Right. The way we skipped whole landline into going into wireless telecom, we feel that we are also skipping a lot of offline retail built up that happened in the Western countries and moving straight to e-commerce and shopping online. So, and I think that's going to bring new efficiencies. And the best thing for us is that we don't have to replace anything. We don't have anything to replace.
Right.
We are kind of creating the whole thing from scratch, which means that we can actually create something which is much more efficient. The same thing is with payments as well, which I'm sure Vijay can talk about. But we are seeing that we are skipping a lot of things that happened in other countries, and we are moving from cash straight away to mobile banking, where mobile phone becomes a credit card.
Right. So what kind of efficiencies do you think you will see when you move more and more from cash to digital to mobile banking, and where the smartphone basically becomes becomes your universe? And what do you think will be the changes that will impact the economy?
So I think one, consumption should go up in the economy, because now it will be much easier to consume as compared to before. And just a simple thing that even if you had the money to buy some things, it was not accessible to you, whether it's a service or a product that you wanted to buy.
Right.
And now it is much more accessible. It's at your fingertips. And over time, the technology will become so simple that even somebody who is not literate should be able to use it. And literacy should not become a bottleneck anymore. So, and I feel that is going to increase the speed of consumption. And from an efficiency point of view, again, our logistics infrastructure is highly inefficient in the country right now. Using mobile phones and ever-present internet, and as well as GPS, etc. We are actually creating a completely new way of doing logistics with sensors present everywhere. So that's the model that we're going into, and it will be significantly different.
Significantly different, complete sea change. Vijay, if I can come to you, you've been an entrepreneur for quite some time, close to 2 decades or so. What are the changes that you're seeing now in the situation when you want to set up a business, when you actually want to scale up, when you want to raise money? How different are things today than what they were probably 5-6 years ago?
First of all, I think we have a social fabric changed as far as last few years are concerned. I remember when in 2000-2001 I started this company, my parents weren't comfortable that I'm not taking a job, because this was sort of a social stigma that instead of being a businessman, you should be a good job, well-paying MNC job, if you will, in a way. And similarly, the talent in the colleges, where if you go to higher, you sort of were the last in the food chain. You would get those who have got rejected or not selected by others. Right. And now, today, if we go in a campus, we sort of have a rofer on our talent. I mean, we can say that we are giving a good opportunity, and chances are that there is a tremendous amount of interest. As far as system is concerned, the government is concerned, I mean, this government just did something very different for the first time, that it treated startup as a sector. It treated digital as an intent. And I think what I find surprising is that earlier I used to have a little bit of uncomfort talking to a person in government and explaining what we are doing, because more or less they sort of had a clue of what is in the real world and what is this digital world. So they had a lot of apprehension in understanding the depth of it. And today they are consumers, they are customers, they are understanding and they are reading around all the places. So they have a lot more positivity around it. So earlier you were not a corporate citizen of a grade A. Now today you are a prince in a grade A sense. And that's the change.
That's the big change. Satyan, you are in a business where you invest and you are the cutting edge of the consumption and the technology change that is happening. Can I ask you to pick up on Vijay's thread about the changes that you're seeing now in the startup world and also in the consumption sector?
Sure. So I think you start with a macro perspective on the user base, and I think what probably Sachin and Vijay would agree to is that the last 3 years have shown an exponential growth in usage versus the last 10 years before that. And that's what's materially changed things. At the same time, in the last few years, smartphones have now come to sub-$100, 5,000 rupee price points, which was a critical threshold for mass adoption of smartphones. Between the growth of data penetration, thanks to our telecom operators, and the reduction in price of smartphones, across all of our media properties, whether it be our news properties like TOI or music like Ghana, CrickBuzz, whatever, some of the other properties we run, the mobile growth has dramatically outpaced everything else. Right. And so that's a nice thing to see on paper. But what's more interesting is that now we see it more commonplace with everyone around us. I think there was always a general sense of cynicism towards digital businesses, and probably today when we hear about the growth and values and investments that have happened, that sometimes shows up. But there is something real there. I mean, it's very clear now that there is massive consumption that's happening off of smartphones, and there are major changes in consumer habits. We see probably, the Times Internet reaches about 150 million users on a monthly basis, about 150 million, which is now about 8x what the Times Group's newspapers reach. Now, that wouldn't have been true 5 years ago. And so from our perspective, we see digital as an opportunity to expand our touch points with consumers across multiple segments, not just media and entertainment, but things like personal finance and other categories where we feel there's a lot of disruption available.
Right. Mobile businesses not just transform the consumption or the media business, but also has had a huge impact on banking. Chanda, Kochhar, if I could ask you to comment on how mobile business is transforming banking and how is it making things easier for you and for your customers as well?
I think if we look at India and the Indian demographics and the Indian consumer, I think the Indian consumer is going digital, social, and mobile. They want everything in a digital format, everything available on the go, and be socially connected. So I think every business has to kind of rethink their own business model and say, does it need this DSM test and do their products and services meet this test of being digital, social, and mobile? And I think the banks are doing the same. They are converting each one of their product, each one of their service, each one of their delivery channels to kind of meet this test and requirement of the consumer. And it's not just what's happening in the banks, but it's actually what's happening across the payments value chain per se, which is kind of digitizing and making the entire payments mobile. If you look at the banking customers, if you look at for our bank, more than 60% of the transactions are now done only on mobile and internet. It's no longer electronic channels, but it's just these two digital channels that more than 60% of the transactions are done. In fact, at the branches, it's now less than 5 or 6%. So that's the change that's happening. What's also happening is that, as this happens, it's not just about digitizing what's customer facing, but it's also about digitizing your own internal operations. So what we see is that we actually have digital channels through which the customers interact, but we also take the absolute brick channels, which is the branch, and convert that experience into a more digitized experience. Right. And then, of course, you take your own internal operations and digitize it. So clearly, it's a sea change. It's as much change that you think is less, because every day things are changing. But the other thing I would say about the Indian consumer is that as much change and as much technology innovation that you offer to the Indian consumer is just too receptive to adapt to it and actually keep expecting more. And we've had that great experience.
Right. So the Indian consumer finds it far more easier to do banking on the net now than probably 5, 6, 7 years ago, and a lot of technological changes have happened. But tell me, as a banker and as a bank, what are the things that have changed or are yet to change in when it comes to regulations, when it comes to processes for you guys, and is there anything that you would wish to tell the RBI governor about or the finance ministry about what things should change?
Well, I think at least as far as the banking industry is concerned, and I'm sure it must be true for various industries as well, is that the only thing that's constant is change. So what is not changing? Everything is changing. Your business models are changing. As I said, the customer demands are changing and the regulations are changing constantly. But in this evolving world, it's about how do you relook at your business models and keep continuously kind of evolving them and keep pace with all the change that takes place. And part of it is technology, as I said, part of it is regulations, part of it, even when you look at regulations, then you try to see how do you change your business models where you consume less risk-weighted assets and yet achieve a better growth in your assets. So I think it's, every part of the business that you do has to continuously evolve, and the business models that are relevant today are not relevant tomorrow and were not in existence yesterday.
Right, change is the only constant, and one bank which has probably been at the cutting edge of probably global change is Standard Chartered. If I can ask you to comment a little bit about, Mr. Birla and Mr. Kotak talked about the debt burden on India Inc. What your experience? I mean, has it improved in the last, say, a year or so, or you still think that India Inc. is too heavily debt burdened and they just can't, go out and invest?
Yeah, so I don't think the debt burden has changed, and as Mr. Birla mentioned, actually capacity utilization is still low. If you see the core sector, it's hovering around 70 to 75%. Right. So clearly, till we see capacity utilization going up and the cash flow coming in, I don't think we'll see the burden really coming off. And frankly, unless the indebtedness comes to an acceptable level, we'll not see equity interest also coming in from strategic stroke private equity. So I think one has to first hope for the capacity utilization to sort of pick up.
Hope for change on the ground, demand going up?
In the core sector, because I think the capacity was put up in anticipation of a certain economic growth rate, right, which for whatever reason sort of slowed down in the last 2-3 years. And clearly the capacity is much higher in the core sector. Right. Having said that, I think in the B2C segment, so for example, as a bank, if I see the retail growth, that continues. For right, most banks, it's 17 to 18%. Right. But on the corporate side, it is a little slow, and clearly CapEx cycle is slow.
The project investment is not happening.
Large project investment is slow.
Do you think, from your experience in talking to industrialists and corporate CEOs, is India Inc., especially the debt burden companies, are they more receptive to doing radical surgery? We had a surgical strike yesterday, but a different kind of a surgery. Radical surgery in terms of getting rid of assets.
Yes, we're seeing that. We've seen some big names. Mr. Birla has bought one of those stressed assets. So we're seeing some big ones also happening, clearly. But having said that, clearly more should happen.
Mr. Kotak, a point about retail credit growth. This is probably what you would see now is a kind of a two-speed economy where project investment is not taking off and CapEx is not taking off. But at the same time, retail credit growth, especially home loan growth, personal growth, continues to be very, very high. Sir, your views on this, and where do you think this will lead to? I mean, some kind of a bubble in the...
Let me divide the answer into two parts.
Sure.
First of all, at a system level, retail credit as a percentage of the GDP is still extremely small. Therefore, there is no immediate systemic issue. Sure. Having said that, there's the fastest piece of retail credit growth in recent times is unsecured loans in whatever shape or form. And the question in my mind is, where are these loans going? Is it financing past debt? Is it financing consumption? What is it financing if it is unsecured? And that's a good question to ask and continue to ask. And therefore, in terms of, we may be okay at a system level, but we must need to know what is this finally funding. And I don't think we at a system level have a good answer to where unsecured loans are going. You see the system level growth on unsecured loans, it's something like 30, 40, 50% per annum in an economy which is probably growing a little slower. So you need to have good answers. And for all of us, or most of us who are in the financial industry, we know that in unsecured loans, the accounting profits come first. The real profits are only in the last two installments. Till then, it's only paper entries. So we really need to be having a good view on where unsecured loans are going. On home loans and LAP, again, there is pretty good growth, but the speed at which homes are growing is slower than the past. But home loans and LAP are growing fast. So again, we need to ask the question, where's the money going? And I would like to also say that we've seen excessive leverage in the corporate sector. We're still in very early days of this cycle, therefore it's got a long time and a lot of legs to go. But as any financial institution managing risk or at a system level, we need to make sure that water levels in the next couple of years will get to levels which will be uncomfortable.
Well, what you're saying is a little worrisome.
Not right now.
Yeah.
So don't create any panics. But 2 to 3 years later, you must ask the panel here, what's the status of retail in India?
What does it tell you about the state of the consumer mind? And once you answer this, and I'd like Sachin also to come in on this, the state of the consumer mind, since the big billion sale is happening, you think consumers are more confident now than they were in the past? They're going out and spending money, despite worries over salary growth.
I think we'll watch this Diwali. I think a lot of consumer companies are depending very much on this Diwali, so we will get some hopefully good news of pickup in consumer durables and other things. Consumers are spending more. One of the very good things which has happened structurally to change consumer credit in India is credit information bureaus. 2007-8, you saw a very sharp downturn in consumer credit, and bad loans in retail dramatically go up. Many banks actually dramatically slowed down retail. But credit information bureaus have changed the rules of the game and have made the consumer conscious that a bad credit score is bad for him or her.
Right. Sachin, your thoughts on the consumer economy and how things are looking compared with, say, 6 months ago or 8 months ago?
Yeah, I think firstly, e-commerce is still small in the overall scheme of things of India, although we grab disproportionate number of headlines in the newspapers. But if you look at the overall share of the e-commerce is about 1.5–2% of overall retail. And although growing very fast, so we see that because of the efficiencies that we are bringing into the system, as well as access to products, giving access to consumer good companies to access to customers, and making data available to sellers and to brands to create products and to optimize their operations, we are actually, we believe that we are reducing the cost of ownership of goods, and that's increasing the overall the transactions in the system. But the next step is actually more interesting than what we have done so far. Whatever we have done so far isn't fundamentally changed the affordability of the consumer. We have improved the affordability from a consumer point of view, but what will really change it is consumer credit. And consumer credit penetration in India is still very small. And we believe that, and in some ways, internet companies are becoming the storehouse of data. We have much more data about the consumer than the credit rating companies. And over time, that data will be mined and used to provide access to consumers. And the hook for the consumers will be that if you don't pay up your loan or whatever credit that you got, you will not be able to shop at these platforms, which will be a huge disadvantage to consumers. So that itself will become cycle for customers. So I feel that we are getting into a very exciting phase going forward, and at the basic layer of payments, whether it's wallets or UPI or payments bank, whatever is required, that is getting created, and that on top of that layer, a credit system will be created, which will really lead to explosion of consumption on the digital channels.
On the digital channel. If you look at the amount of money that is flowing into the consumer economy, it looks like there is probably a Diwali every day or Diwali every week. Vijay, are we over relying on the consumer economy now? Probably that's inevitable to some extent, but are we really over relying?
Not really in a way. I would say that India's consumers, if you see the volume of people who have a credible financial services available to them, whether it is deposits or whether it is credit, that's fairly small base on such large population. It is good to assume that people who are banked and not banked yet, or not sort of formally banked, I'm including PMJDY people into a not so yet completely banked list. I think we would see, once these payment banks and opportunities like these come, at least 30-35% of additional deposits to come. Current deposit base will increase by at least 1/3. I believe that is the potential of this new banking ecosystem out there, and which in turn will give a cycle of how this money will be used, whether it is, today we are obliged to put it in government bonds and securities, but at the same point of time, the same consumer ultimately will do digital transactions and get a digital trail built, which in turn, like we talked about, will get credit capabilities. And we are able to see some incredible experiences. Maybe you've seen some of the places where people are paying using scanning the Paytm QR code. Right. We've started giving loans as low as 20,000 and 40,000, and they get paid in a week or two, because the shopkeeper is able to use this as a rotation of inventory. While, like Sachin said, there is a 1% retail that is online, but there is a 99 or massive large number of percentage which is remaining offline and will remain offline in long term. So, are we relying on consumer more? I think we should rely more on the technology, because there is so much of economy which is not technology enabled, and once it is technology enabled, there is an inherent growth inside the economy itself, which will get visible and available to traditional financial institutions who have not been able to yet reach to them. So I believe we still have large consumer growth and systematic growth pending inside this country, just by adding technology, smartphone, data capabilities, ratings, right, and payments and whatnot, we'll be able to unleash there.
Satyan, technology, the real game changer to growth and productivity?
I think the thing that gets missed often is that we look at startups and technology as an isolated bucket. So you think about e-commerce, but the reason it's actually so interesting and captures as many headlines as Sachin likes or doesn't like sometimes is that it's actually influencing the overall economy in many ways. If you just look at this panel up here, the ways that the banks have iterated and evolved and improved their products because of digital wallets that have been in existence. Or you think about offline retailers that are seriously evaluating what's their online strategy because of companies like Sachin's. There's a famous venture capitalist in the US who has said that software is eating all industries, not just digital industries. And I think what we're increasingly seeing is that these businesses start in a very simple isolation. Paytm started as a simple place to recharge your phone, and is now becoming one of the major innovators in all of fintech or financial institutions. And I think the reason startups offer so much excitement and technology offers so much excitement is because it can very quickly expand its base into doing a lot more than what people think early on.
Great. A different kind of a question to each and every member of the panel. We saw what happened yesterday, the surgical strike on the so-called terrorist launch pads in Pakistan. And we saw the market reaction to it and the industry reaction to it. Can I ask each one of you to comment upon what this means, what are the implications of this? Is it a short-term, knee-jerk, temporary reaction that's going to go away, or is there something that we should be worried about? Mr. Birla, if I could start with you on this.
So to me, it sounds like a very targeted, very well thought through kind of surgical attack that happened at the border. I don't think it's anywhere close to becoming a war anytime in the future. I think that in fact it aims at creating more stability in the region than the other way around. I believe that what happened in the market yesterday was obviously a knee-jerk reaction. Fundamentals for India remain very much the same. I think it is, if not the most, one of the most interesting markets to invest in from all the different points of view that all of us know about. And I think that that's a blip that's going to pass by very soon.
Pass by very soon. Mr. Kotak, markets have recovered today, so no worries.
I think first of all, it's a very well executed action. And it's, of course, from a military point of view, but even more interestingly, from a diplomatic point of view. India managed its diplomacy very well to get the US come out openly and effectively support this move at the same time means the army and the front line and the Ministry of External Affairs and Foreign Policy were all working wonderfully together. So I think that's a very big plus. What we have to ensure that we continue with a set of diplomacy, because the risk, if at all, is a irrational behavior from our neighbor and who's prone to that. And that's something which we should be alive to as the potential risk. And from a economic and a financial market point of view, it's extremely important that we do not allow risk premium for India under any circumstances to go up as a destination for investment.
Right. So that means more restraint, but
diplomacy with appropriate protection of the country.
Appropriate protection of the country. Chanda, if I could have your thoughts on this.
Yeah, well, I think everyone looks at it as a focused, action, very well executed, very seamlessly executed, something that was required to be done. And if you look at the market's reaction today, they have viewed it in that manner. Of course, they would watch, whether what could be a medium term or a longer term implication to this. But I think, currently the faith remains on the macroeconomic indicators of the country, and the belief is that the macroeconomic indicators continue to remain strong. India actually as an investment destination appears much better than many others. In fact, we started about talking of ease of doing business. We must remind ourselves that we have the competitive index of the World Economic Forum, where we've moved up 32 points in 2 years. We've moved up on the World Bank ranking as well, and a lot of things that have happened, some that Mr. Birla spoke about on e-auction and so on, many on the structural side, many on bankruptcy code, many on how do you change the PPP models. For example, on roads now we have a hybrid model. On construction side, we are saying, can monies be given out against guarantee if arbitrations have happened? So I think all those are the things, the positive things that the markets are looking at.
Sachin, is there any danger of this, you think, escalating beyond a point and becoming a bigger issue, a bigger conflagration?
I'm not a foreign policy expert, but I think if I look at it from an investor's point of view who are investing in the technology sector in the country, I don't think much changes from them for them. I think there could be another way to look at this. I think if India's defense spending goes up and that defense spending starts coming into the local companies and local sectors, that can actually increase the pace of technology creation in the country. Where AI, robotics, they play a huge role in today's warfare. I think that can be, and already there are some Bangalore companies which are actually helping the government either monitor borders or help them create drones. I think that can, and if you look at the history of Silicon Valley, I would say that a lot of that was created because of the defense projects that were funded in that area, and that later went into companies that were being created over there. So I think I don't think anything changes from an investor's point of view and from a consumer's point of view.
So nothing changes from the investor point of view, nothing changes from the consumer point of view. Satyan, that's obviously good news.
Yeah, I mean, I think what everyone is saying, which I would echo, is that short term, nothing. I don't think there's enough to say that anything is moving the needle. Obviously, the uncertainty is the irrationality that can kick in from the other side. And I think there's no doubt that the way this was handled, both in terms of handling international consensus building and sending the right messages domestically to our own citizenry as well as to Pakistan, were done very, very effectively. But it's not all in our hands, and I think that's why vigilance and, frankly, one of the things that gives me a lot of satisfaction is that our space program is disproportionately stronger than what our country should be at. It's probably a top 5 space program in the world. And what that matters for is that it affects things like intelligence and surveillance, where I think we have a very unique advantage as a country in terms of being able to know what's happening. And that's important for stability and management along with diplomacy.
Zarin, foreign investors, knee-jerk reaction, now everything is over?
Yeah, I
would you
think
agree with
so.
that?
I think, as Uday said, it's more a function of what the neighbor will do. I think that uncertainty is something that people would want to sort of a little bit have a cautious note on that, really.
Have a cautious note on that.
Yeah.
Mr. Shanghvi, sir, your views?
I'm not an expert on global geopolitics, but as I see, government is doing everything right. And it's, as I see, a faultlessly executed process, is that we're giving appropriate messages to people within the country. We are giving the same message to countries across the world so that they are along with us. And in the environment in which we are, I think the message to the neighbor also that this is a specific response and it's not a war, I think should help minimize the potential risk of a, what you call, unreasonable reaction.
Unreasonable reaction. Yeah. Vijay?
Again, I think it is not for me to comment, but still, I believe that great company or a great business or a great country is built with right amount of aggression and right amount of defense in the play. And if we show up ourselves as timid in a marketplace or in a border space, we sort of get walked over. This is the time to go fly fighter planes on Lahore if it takes that, or even attack the surgical attack even the next time. We should just say that we are here and you better bother about it. And that is what it is.
Great. Spoken like a true entrepreneur, probably. Okay, a different topic, a different subject. Chanda, if I could ask you, there has been a lot of talk in the media and in the commentary in the intellectual section about the slow pace of growth, the uneven pace of growth, and we have focused a lot on manufacturing. Iron ore production is up or down, coal production is up or down. Today, core sector is at 3% better than July or the previous month, and we are all very happy. Services, just more than 50% of our GDP, is growing at close to double digits. Somewhere, are we overlooking that aspect and focusing too much on the negatives, you think?
Well, I think for a country like ours, both to achieve the desired growth rate or the potential growth rate as well as to create employment, we do need all sectors of our economy to fire up. So we need as much of services as we need manufacturing, as we need agriculture, and as we need technology and entrepreneurship. Right. And I think it's all the 4 sectors that should provide growth. But you're right, we do get caught up on manufacturing and ignore the fact that consumption is growing, that services are growing, and that is providing the base for growth. I think we have to recognize that for some time to come, when it comes to capital investment, it will really have to be the government-led capital investment that will drive growth, and private sector investment will come only a little later. For 2 reasons we discussed earlier. One is that the projects that are under implementation or were under implementation, I think the corporates are going to wait for all those projects to generate their full cash flows. We are not yet there. And it's only with that actually their leverage levels will correct. But in the meanwhile, the government-led capital expenditure has to provide that part of the growth. But the rest, the consumption and the services is playing up. And if you look at the government-led part, again, I think the beginning is really being made from the roads and highways side. A lot of contracts now are actually being given out, even on the EPC basis. So the new hybrid model, And then you will have railways. Now we are also seeing that with the large railway projects being given out, some of the second order impact of that subcontracting to some small and medium enterprises that's coming. Later, defense should fire up. So I think the capital investment will really for some time come from there.
And will also come at the later stage, as soon as your economy reaches a particular level of activity.
From the private sector.
Sachin, services can be the real big game changer for us in terms of both employment generation and GDP growth?
I think so. I think I talk about this too actually with Nandan Nilekani quite a bit, and he has certain views on this. So I think traditionally China's economy has grown based on a lot on manufacturing, exports, while and big businesses, right? But I think India can follow a different path over here.
Right.
We can take the path of services driven, domestic consumption driven, and SME driven growth. That's something that we can take, and it will be a unique model, but it's definitely workable. And because of the technology accessibility that we are providing now to everyone, for example, Flipkart has like 100,000 sellers on our platform, and that's just with less than 2% of retail being online today.
Right.
So the amount of employment that will be generated by technology platforms, especially given to SMEs, will be and making them more efficient and more productive. I think that can be a game changer.
That can be a real game changer. There has been a lot of talk about when growth will really take off. We thought it will happen last year. It didn't happen. You had a poor monsoon and you had the commodity price crash. This year the monsoons are better. So there is again this talk that this year we'll probably see that and happening. And also the fact that GST was passed gives a lot of hope to people that something definite, magical probably is going to happen. Is GST, I mean, are we probably overplaying it a little bit, ignoring some of the complexities there? I mean, the tax rates do matter, right? I mean, as industrialists, what are your views? Mr. Birla, again, maybe if you could.
So I think GST is a very positive step. Obviously, we've had national consensus, and in a world where you have decisive views, where you have divisive views within nations and across nations on most important subjects, I think to have national consensus on a subject like GST, which is so critical and which is being debated upon for so many years, is a huge thing. I don't think that anyone is underestimating the fact that it is going to be a huge challenge implementing it. It might take another 6 months, another six months after that to get it actually going. It might take 2 or 3 years before companies actually start to feel the benefit of it. But the fact remains that it will increase tax compliance, which is a huge thing. The fact remains that it will propel GDP growth by at least 1% or 1.5%, which again I think is a very deep impact. And I think that this is something that we can really crowd about as a country.
Right. Chanda, GST will be the game changer, or do you think complete resolution of all NPAs will really give that will really kickstart growth more than GST?
Well, I think we need both, and we need many more things to get the economy to continue for it to take. I don't think it's one vis-a-vis the other. Right. I think GST will have its own very positive impact, and yes, what's also important is to actually implement it flawlessly. The stressed asset situation is another situation which also needs to get resolved, and I would say that it's more about resolution of assets and how do you get these assets which are actually already on the ground to start becoming productive rather than allowing them to degenerate and not be productive.
Right. How close are we, I mean, how close is the banking industry to resolution of the stressed asset bad loan issue?
So I think a lot of things are happening. One is that, a lot of promoters are actually now willing to, or I should say agreeing to sell either their core assets or even non-core assets, or rather I'd say even core assets. I think the amount of activity of sale that has happened and is in the pipeline is something that we've never seen before in the Indian economy. So that's one part. The second is the banks are also actually very actively working with the businesses to find that resolution. The third is that, the RBI has given us a lot of tools to again make this happen. The ability to convert loans into equity, to do STRs, to break the loans into sustainable, non-sustainable, and so on. The fourth is that all said and done, whatever we are talking about capacitizing the judiciary, making the arbitration processes faster, the DRT processes faster, will over a period also have a positive impact. So I think all those things are working. A lot of the sales have taken place. Some of those that are known already, some are smaller transactions, some are larger transactions. Many more are in the pipeline. But we must also understand that these are large assets that we are talking about. So the resolution takes time. We must also understand that given where the global commodity prices are, there is just that much less demand for core assets. So today there are probably less buyers and more sellers, so it takes longer to get these deals consummated. And then even when they are consummated, the procedures that we have to follow in terms of all the court approvals and all that takes time. So I would say a lot of work is done, but a lot yet needs to be done.
Needs to be done. Back to GST once again. Mr. Kotak, you think the Indian industry is worried about the kind of tax rates that will happen? Are they ready, you think?
I think India is going through what I would call as a strategic transformation.
Right.
And we've seen one such transformation on the external side happen yesterday,
right,
where India says we will be counted and not taken for granted. Okay. Within the internal side, I think three important changes. One, the bankruptcy code.
Right.
Second is GST. And third is tax. People better pay taxes.
Right.
So all these three domestic changes which we are seeing create a short-term frictional pressure, which makes it difficult in the interim. Therefore, for example, Chanda talked about resolution. Bankruptcy code is probably 6 to 9 months away. Till then, we are going with our existing resolution system.
Right.
GST will, in the short run, have teething problems till we get to resolution. Black money, if you're moving away structurally from the black money syndrome,
right,
in the short run, it pulls away some of the lubrication which may have been there in the system historically, including in the real estate sector. But long term, it's a transformational move. So whether it's our external position or internally, we are seeing a structural transformation with intermediate challenges, but long term, fundamentally better.
Long term, fundamentally better. Mr. Shangvi, as the other major manufacturer here on this panel, what are your issues about GST? Any major issues? Or you think the government is doing whatever you've seen in terms of discussion on tax rates and discussions on issues? They're all going in the same.
No, I think as industry we are quite positively looking at GST, and I think it will streamline operations in such a way that over time most of the economic activity within the country will become digital. The other positive thing that I see out of this is that because of this interconnected digital economy, the overall percentage of the economy which is, let's say, in cash today will increasingly get converted into regulated and reported economy. And if we see the size of our overall GDP and look at our tax revenue as a percentage of the total GDP, it's amongst one of the lowest in the world. But GST and the increasing use of what you call digital information on all the revenue departments will help towards improving this tax base, and that will allow us to kind of leapfrog into development, allow us to invest in infrastructure, and the overall economic growth will pick up going forward.
Overall economic growth will pick up going forward. We need to wrap up, but we have time for only one final set of questions. So I'd like to ask this panel. There's been a lot of discussion ever since this new government came to power and on a broadly economic mandate about the growth prospects in India and about where we should be and what should be our target. The former governor of RBI, Raghuram Rajan, said that we should not be satisfied with anything less than double-digit growth rate. Mr. Kotak has talked about how we should aim for doubling, tripling your per capita income. Can I go around and ask this panel, what is the kind of growth rate that you think that India should potentially aim for? 12%, 11%, double-digit growth? And how soon do you think we can get there? Maybe, Vijay, we can start with you and we can come around this.
My belief is that a sustainable growth rate matters more than the double digit in the short term and then falling from that growth rate, because I believe in building a momentum is what is good for our country and overall what we're seeing, because sometimes euphoria gets created and then bubble gets out, then people sort of feel that, oh, everything is euphoric and this bubble is going to go out. So people start to disbelieve in the growth itself. So I will be very happy if we can sustain ourselves beyond 7% and continue to keep that up forward, whether sometime 8, 9, 10 or in those ranges instead of dropping and coming back sort of thing.
Sustainable high quality growth.
Sustainable high quality growth for long term is a great asset over some peak shorts.
Mr. Chanda.
So I think to look at our growth rate in isolation of global economy, I think is only looking at part of the issue. So I believe that our internal growth rate will continue to be robust, but a large part of our economy is also linked with international business, and that's linked with how the global economy moves. So there will be a certain percentage which is linked with how globally we are able to export or increase our export. But I believe that even with all the uncertainties, to be able to grow at 7+% should be clearly possible.
Should be clearly possible. That's a global link, and that is something that we're probably ignoring or probably not talking about too much. Zarin, what are your views?
Yeah. I think along with GDP growth, we should aim for Human Development Index improvement. When we see our neighbors, if we see Sri Lanka, for example, clearly we are way below there. And to my mind, that is also a very important element of the overall growth that the country should aim for, along with the GDP growth.
Right. Mr. Kotak?
I mean, I am pretty obsessed about per capita GDP.
Yeah.
India is at $1,800 per capita. In 1975, India and China were the same. We are at $1,800 per capita. China is at $6,000 per capita. So the denominator argument which we may use with other countries is not applicable vis-a-vis China. So we have a lot of ground to catch. And if I think about, say, 10 years from over the next 10 years, if we think about, say, $5,000 per capita, which would still be lower than where China is today, okay? That's nearly 3x, tripling. And to get even there, my arithmetic tells me it's somewhere between 9 and 10% per annum dollar growth you need to reach $5,000 per capita 10 years from now, which is still lower than where China is today.
Got a lot of work to do. Mr. Birla?
Well, I won't even talk about China, and I think even if you just, let's say, focus on BRICS that we kept talking about until some time ago, I thought that Brazil was a great economy to invest in. We have a fairly large operation there, great predictability, good policy making, stability. But if I look at it now in the last year and a half, the economy is pretty much of a mess for various reasons that I wouldn't get into just now. If you talk about Indonesia, for example, it had a great run, more than 10 years of very good growth, again, stability, predictability, solid governance. Right. But again, Indonesia has had a very bumpy ride, some good years, some bad years, political instability, macroeconomics that have yo-yoed from one end to the other. I think India, just going beyond the rhetoric, really is today in a sweet spot. Given the fact that we have operations in more than 40 countries, I think we are perhaps more self-critical than we need to be. I think we are more circumspect of ourselves than we perhaps need to be. I think we have a government that, a polity that is now genuinely willing to partner in a very even-handed way with industry and is looking to resolve issues for industry. I think that the MIP that happened thanks to our friends in the steel sector and the kudos that the government has got on account of that has encouraged them to look at finding more such solutions in several other sectors, hopefully fairly soon, by partnering with industry and by trying to find solutions that are not partisan, that don't clear the pitch in favor of or against a few players, but actually create genuine value for everyone in the industry, and also solutions that are WTO compliant, for example. So I see no reason why we shouldn't be looking at growth at anything less than double-digit growth. Right. I believe that, again, it's not just an ambition, but when you look across the globe, when you're actually running operations across the globe, I believe that every country, every economy has their own issues that they're grappling with. I can't think of any country today where we are, where we don't have a fair share of problems. I think we spoke about corruption for the longest time. but you have corruption in some of the most advanced economies across the world. The fact is that today developed economies put up anti-trade barriers much more in a much more prolific way than India has done in the past. I don't think that we've yet learned how to use non-tariff barriers to protect our industry, which is a very legitimate way of safeguarding our own industry. So I think we have practically all the ingredients. Indian entrepreneurship is, I think, completely unparalleled. I think that Indian managerial talent, and I say this without any bias, is amongst the best in the world. I think the intellectual prowess that we have here in India is completely unmatched. The kind of commitment, the emotional commitment that you see people put into their work here is again quite outstanding. So I don't see why, just based on facts and just with a very objective viewing of things, India cannot achieve double-digit growth.
Double-digit growth, Chanda, that should be our target?
Yes, absolutely. I think the potential, aspiration and target is all and should be double-digit growth. I think we have two very broad, very big ingredients for it, and I think at least three big enablers for it. And the ingredients are that, I mean, where would you find such a large country which has such a young population? We are going to have people who are going to keep earning. We're going to add people to the earning age group. They're going to consume, they're going to aspire, and they're going to drive growth. So our demographic dividend at a time when the rest of the world is getting older, I think that's a big advantage. Yeah. The second is that we still need to invest in infrastructure, and something that has so far been a constraint can be converted into an opportunity. We don't have to build bridges where people have nowhere to go to. We have to build bridges and railway tracks and roads where people will actually use them. So I think these are two big ingredients. The enablers that we have is that today we are in a very sweet spot as far as macroeconomic indicators to the rest of the world is concerned. We have the government will, intention and ability to actually bring the changes that are required, and then we have the Indian entrepreneurship that will actually make it happen. So we have this. I would say that there are countries in the world who cannot change their ingredients. I mean, if they are getting old, they cannot change their demography. Right. So we have what is needed, we have it given. The rest of it is in our hands. Do we make our demography, educate them, train them, skill them, give them basic health, make them employable and create the employment opportunities. But the work that we need to do is in our hands. The ingredients are actually given.
Ingredients are actually there. Sachin, e-commerce can help us get there.
No, I think I can't add anything more than what has been said. I think I'll just agree with everything. I think anything less than double-digit growth is disappointing. I would say. I think we have all the ingredients. We have such a low base of per capita income in the country. We have such a young population where the whole world is slowing down. And I think it's just absolutely, I think it's a wasted opportunity. Every day we are not growing more than 10%. Absolutely.
Yeah. And agree with everyone here. I think one thing I'll just comment on is how at least I think the digital sector will affect this, and that if you look at China, the digital sector is about 4% of GDP, but it's projected to be as much as 20% of GDP growth over the next 10 years for China. Right. And when we think about the small per capita income base today, what will drive economic growth for India will be a mix of infrastructure and manufacturing and proper financial institutions, but then also new age economies that can actually build ecosystems of their own. And so when we see companies like Flipkart and Paytm potentially becoming very, very large players of their own, right. They breed ecosystems. You look at the talent that's employed by our companies and the rapid wage increases that you've seen and the quality of high talent, globally relevant talent that we're developing, and the next set of entrepreneurs that will come out of these companies. I don't know how to calculate this and how this affects a number, but I do feel like this can be one of the major drivers of growth over the next 10, 20 years for India if we can develop a successful and healthy ecosystem with the next set of entrepreneurs and funding and development and new businesses being built out of it.
Thank you, Satyan. A great writer many years ago, many hundreds of years ago, started a novel by saying that we live in the best of times and we live in the worst of times. When you look at the Indian economy today, you can't escape the conclusion that both are probably true. This is an economy of contrasting performance, contrasting fortunes. There is one section of the economy that's probably doing very well, the consumer sector, the services sector. There is another sector of the economy that is not doing very well. The sense that we get from the panel today from the captains of Indian industry is that we should not rest, we should be ambitious, we should aim for double-digit growth, and we are on the cusp of major, dramatic, radical transformation. With these words, thank you, gentlemen. Thank you very much for taking part in the panel discussion and for a wonderful, wonderful evening that we have here. Please give them a big hand.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.